This is all about Bitcoin, a show dedicated questions and markets related to Bitcoin. Little b for the currency, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin all the time. Taking a look right now, Bitcoin price XBX index currently in the red at $20,800, losing over 5% of 24 hours. The most reliable reference prices for institutions for CoinDesk brand globally as the leader in crypto news, events, and data. All right, here's our CoinDesk Bitcoin news roundup. A Bitcoin sell-off accelerating Thursday as the market digests the collapse of Silvergate Bank, which culminated in its voluntary liquidation Wednesday. Crypto quant data showing that transfer volume denominated in BTC is down 35% over the last 24 hours. At the same time, total number of transactions on the blockchain has by 17% during this same time period. The number of active addresses has fallen by 10%. For the month of March, CoinGecko data showing Bitcoin trading volume has come in at an average of around $25 billion versus around $36 billion for the month of February. And Three Arrows founder of the exchange will offer claims as portfolio margin. The exchange, abbreviated to OPNX, will feature zero proof on user balances and a portfolio margin feature that was pioneered by FTX. OPNX CEO Leslie Lamb saying users will also be able to use bankruptcy claims as margin as well as sell on a public order book. Meanwhile, BitGo CEO Mike Belshi and Coinbase Chief Legal Officer Paul Grewal among those testifying before the House in a hearing titled Coordinated, the administration's attack on the digital asset ecosystem. In his explaining how the latter fared for the crypto industry. Let's watch.
2022 was an undeniably miserable year for digital assets, with a number of dramatic failures in the system. This has led opponents of the digital assets to wrongly proclaim, "I told you so, digital assets are unsafe for banks and the financial system." But the underlying problem is not caused by including digital assets in our markets. The problem is caused by excluding digital assets from our markets. Our regulatory failure to keep pace with innovation has created a regulatory exclusion, which is directly responsible for harming the very investors that we are supposed to protect.
This comes as House Republicans are aiming to rev up a comprehensive plan to reshape crypto regulation, according to Congressman French Hill. Finally, Bitcoin game developer Thunder Games is releasing Bitcoin blocks, a Tetris meets Sudoku play-to-earn mobile game that allows players to compete against others to earn Bitcoin. Through a new gaming graph feature, users will be able to connect their profiles on decentralized social network Nostr to help build out their gaming identity across Web3 social media platforms. Thunder has been building games on Bitcoin's Lightning Network since 2019 and says 80% of their users are new to Bitcoin. All right. Joining us now with more on the Silvergate collapse, nevertheless, is Jesse Austin Campbell. He's a former Paxos head of portfolio management and Columbia Business School adjunct professor. Austin, thanks for joining us. So, you wrote a Substack on the subject of banks, how they fail, and putting Silvergate in perspective. And you say it's a classic story of how a bank can fail if the circumstances just happen to be just right. So maybe you could start out by walking us through that.
Yeah, so I think one of the important things to realize when people think about banks in general, and this point is not specific to crypto, is that the fundamental business of a bank is taking deposits and then making loans with those deposits. And the risk they're always managing is what happens if all of my depositors come back and want their money? Am I going to be able to liquidate these loans? Am I going to have enough money to pay them all back? And that is a story sort of as old as time in banking. Many banks before the advent of crypto have failed from that exact risk. And the thing that all banks need to do is to understand how volatile are their deposits, and based on that, what kinds of loans or securities can we own against those deposits without getting ourselves into trouble. And I would say my view is that that issue is at the root of the issues with Silvergate more than anything specific to crypto.
Yeah, so what did Silvergate do wrong? They owned treasury bills. They were paying 0% to depositors, but you say they took duration risk.
Yeah, so duration risk is the fixed income nerd way of saying that you bought longer dated bonds. So what happened with Silvergate is exactly as you described. They had deposits for which, as best I know, they were paying 0% to basically everyone. So that can be very profitable if you just went and only bought T-bills, which are very short-dated treasuries. Silvergate, however, at some point began extending their portfolio. So they were buying longer-dated, 5-year, 10-year types of bills. And then what happens is as interest rates go up, bond prices fall. And because Silvergate had a very concentrated deposit base in the crypto community, when there were problems in crypto and people began withdrawing from the bank, they were then forced to sell those securities. And because interest rates had gone up due to the actions of the Federal Reserve, they're selling those securities at a loss. And that makes people nervous. And so more people withdraw, so they sell more securities. It's the classic downward spiral as that behavior continues. Really, that's the simple story that happened as a result.
You also say they were cut off by the Federal Home Loan Bank. So was that also a death knell?
Well, so the FHLB can loan money to banks, and Silvergate was essentially closed out on their access to that system. So when you're in an environment where you're having depositors withdrawing and you've got securities on your balance sheet that you don't want to sell or loans that are illiquid, one of the things banks will do is try to borrow money in other ways to pay out their depositors and then let things go to maturity. And from my understanding, the FHLB cut them off for that. It's one more source of liquidity they could have used that they lost. And when you run out of ways to maintain liquidity, that's when the game is over as a bank.
Hearing on DC, U.S. lawmakers are hosting a hearing, and they're saying they're monitoring the situation with Silvergate. They're saying that, well, what happens when you invest or focus on an industry that's very risky? So I wonder, what will be the fallout of this? We have Gary Gensler, the chair of the SEC. We have Fed Chair Jerome Powell. We have lawmakers warning about banks trying and avoiding or cautioning them to avoid the digital asset industry.
Yeah, I think that is the wrong message, right? Like, I agree with regulators that crypto deposits are probably riskier than your average deposit. It's a high volatility space. Prices move around rapidly. Developments in the ecosystem are very, very quick. So you need to look at a deposit base coming from crypto companies as more prone to flight than your average deposit base. Now, that doesn't mean you can't bank them. That doesn't mean there's not safe ways to face the space. We have other banks in the space that have done okay. And what it does mean is just that you either, if you have a concentration in risk due to the crypto industry, need to be very conservative on the asset side of the balance sheet and hold only extremely short-dated, highly liquid securities that if depositors come to redeem, you can liquidate. Or you need to have a bank that's quite diversified, has deposit bases in other uncorrelated industries, such that if the crypto depositors were to come for their money back, your balance sheet is robust enough to take that on. So when you look at the ecosystem, there are banks like, say, Signature, that have been banking crypto as well, that are much less dependent on specifically that one sector, who have been fine.
Yeah, you tweeted, if anything, crypto deposits are probably stickier now for Signature now. The biggest competitor just died. If you want to worry about risk, zoom out and think about what would really drive it and construct your scenarios correctly. So you don't think that Signature will fall into the same problems that happened with Silvergate?
So if you look at Signature's balance sheet, their crypto deposits have been in, call it, the low double digits. So somewhere in the teens to, at the peak, probably very low 20-ish%. And they've cut back on that activity already. They've taken some risk steps to isolate themselves from the flightiest deposits. They've eliminated some of their customers and some of their activities. So they've been quite proactive here. And that leaves you with the rest of the balance sheet, right, which is well over 80% being diversified in other industries, those that are largely, quite frankly, uncorrelated or at least very loosely correlated at best to activity in crypto. So they're probably in a situation, given the liquidity of their balance sheet, where if every single crypto customer came and took their money out, they still have more than adequate liquidity. That's a very different position than somebody who had over 80% of their deposits concentrated into the crypto industry, or even somebody like, say, Silicon Valley Bank, which, as we've seen, is down big today. They have a correlated problem in that they're also facing tech companies for which the tide goes out at the same time as crypto often.
In terms of Silvergate, is there any further problems in terms of potential contagion for their depositors? You mentioned, if there was a stable coin issuer that kept all their money with Silvergate, I mean, it may or may not be very difficult for them to get it out right now.
Yeah, so there's two kinds of problems you can have when a bank is liquidating. Problem number one is, can I get my money back at all? Right, which is to say, do they have enough to pay everybody back? And if not, what's going to happen? You can lose money on uninsured deposits in the United States when banks fail. Right now, the news coming out of Silvergate indicates they think they can pay everybody else out, but I would say that remains to be seen. You have to see it play out. The other part is, what time frame are you going to get your money out on? If that was money you were counting on for short-term liquidity, you may have a problem just from a timing perspective, even if you get all of the money back weeks, months later, right? So I would say you could be facing both kinds of those problems, but many of Silvergate's depositors already withdrew. So most of the critical concentrations are gone. And it's a very, very small bank. This is definitely not systemic. This is a bank with low tens of billions. Contrast that to, say, JP Morgan, which has an over $3 trillion balance sheet.
Right. Well, we are seeing effects in the crypto industry. Block One saying that they exited their Silvergate stake. They're saying their portfolio firm has no exposure. Also, just in general, Crypto.com, they're struggling to maintain their fiat on-ramps in the face of this crypto banking crisis. And so we will see problems in the crypto industry and trying to access those bridges. All right, Jesse, thank you so much. And I encourage folks to check out his Substack over on when you have time. Okay, that was former Paxos head of portfolio management and Columbia Business School adjunct professor Jesse Austin Campbell.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Silvergate Bank's decision to wind down operations amid the worsening macroeconomic picture has fueled digital asset investor anxiety, spurring demand for derivatives that offer protection against price slides in major tokens. The 30-day Bitcoin skew, derived by looking at the difference in implied volatility and demand for cheap out-of-the-money calls versus out-of-the-money put options expiring 4 weeks, shows the strongest bias for bearish put options in over 2 months. That's a sign investors are worried about a deeper slide in the Bitcoin price and are buying put options to hedge their long spot or futures positions, or are simply looking to profit from potential bearish price action. Joining us now to discuss the BTC price and more is Tactive wealth advisor Eddy Gifford. Eddy, we're seeing an accelerated decline in Bitcoin at this hour. What's your outlook and why is this happening? Is it market reaction to the Silvergate liquidation?
I think Silvergate has something to do with it, absolutely. I think that there's a lot of people that are scared that maybe the domino effect is just starting and there's, first FTX, now Silvergate, who's next? We also had news out of the Fed this week where, Powell was very, 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 very hawkish on raising interest rates likely higher than anyone wanted to even expect that he would do. And moreover, potentially keeping those rates higher for longer. And so in those situations, risk assets in general tend to decline because valuations are a function of the ability to meet estimates and the interest rate environment, right? So if the interest rate environment remains elevated for longer, that's going to push prices down. And, the fundamental chassis of the blockchain that crypto is related to is going to fall as well. So, those are the things we're kind of seeing. It's just that they're all happening at the same time. So it's hard to say like, oh, it was this, this, or this. But I think it's definitely a combination of factors for sure.
Yeah, if that is the case, there will be lower liquidity and especially less growth for risk assets. So I wonder, how low do you think Bitcoin could go in those circumstances?
Well, we're definitely looking at 20,000 as kind of like our main focal point right now. If we break below 20 and hold, I think we get to 15,000 pretty fast. If we break through 15,000, I think we go to 10 pretty fast. So if we're looking at this as, hey, I've got $1 million to invest right now, where should I put it? When I say put it all in Bitcoin, I'd say no. But I do think that there still is opportunity here. The old investment rules still apply. Yeah, when people are scared, that's when you should be adding to positions. And so adding right now over the next 12 months, building a position of maybe 5 to 10% in the alt space of your portfolio could actually end up benefiting because the economy goes down, it goes up, the markets go down, they go up. I think the foundation that is Bitcoin is here to stay. And we've got a halving event around the corner next year. And that typically has been a spark for bull markets in Bitcoin. So while everybody else is kind of scared and running away, we're saying, hey, this is a time to probably start adding, believe it or not.
Do you see further contagion coming in the crypto industry? I mean, after FTX, now we're seeing the blowup of Silvergate Bank, and government agencies are cracking down on crypto firms like the SEC settlement with Kraken. The agency is also suing Terraform Labs. So, what is there further fallout ahead?
I mean, I think that it's going to be one of those things where it's going to be survival of the fittest. I think there's going to be more companies that fall, but I think there's going to be companies on the back end of this that end up being really strong because of everything. The ones that are doing things right, so to speak, and the ones that are doing things wrong are going to be filtered out. Whether that's because the investor says, I'm not messing with you anymore, or whether that's coming because of regulations. Investor behavior is very, very similar, and human behavior in general tends to track. So I think that, we're in a situation where, I think that we'll see a few more companies fall, but that's just going to make the ones that are left on the back end that much stronger. And I think that it builds a case for, the back end of this being maybe the part where we start actually seeing some more widespread adoption of digital assets in general.
Let's talk silver linings then, Eddy. You say the big picture will eventually change, and there is a halving event next year, which typically sparks a Bitcoin bull market?
Yeah, I mean, the nice thing about Bitcoin, I like to compare it. It's not exactly the same thing, of course, but when you look at something like gold, right? There's only so much gold you can mine because there's only so much gold out there. Well, that's the way that Bitcoin was built as well. There's only so much of it, and every roughly 4 years there's a halving event, and so when a person mines a Bitcoin or does the work to mine, they get a little bit less every 4 years. And so what that does is that it makes sure that there's a finite number of Bitcoin out there, which gives it at least kind of maybe some storage of value from like an inflationary standpoint. But also, it's just one of those things where if more people are owning it and there's less and less and less of it, then over time it will go up. So am I jumping on all the altcoins right now and saying, hey, we should go buy those? No. But am I scared of Bitcoin? Not, absolutely not. I'm not scared of Bitcoin. And I think that it is a time to at least be paying attention and maybe starting to build a position over the next 12 months. And if you own a lot of it, then you trade it. You don't just own it right now. You have predetermined exit strategies and profit-taking strategies in place.
Mm-hmm. Well, let's leave it on a positive note, Eddy. Thank you so much for joining us. That was Tactive Wealth Advisor, Eddy Gifford. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3. Also join us tomorrow morning at 9 a.m. Eastern for First Mover. You're watching CoinDesk TV.